Guys, let's talk today about how to bust a trading slump. As you guys have probably seen, this market's been in the shitter since January, really since November. The tech bubble started to bust. I've talked to literally hundreds of traders, Twitter, Instagram, even people from some of my groups, and there have been so many that have struggled with adapting to these market conditions, especially those that trade on their own. When you trade on your own, you got to you're seeing the market in one lens and you may not be able to see it from the lens of other people, which is one of the good things about trading in a community. But so many traders have been in a slump this year as they struggle to adapt to these market conditions, mainly on the fact that we're in a bear market and what looks good ends up always fading off, right? You see this hot long setup and inevitably you buy it, right? And it just completely reverses. Now that is actually a trading tactic that we utilize, a shorting technique that you guys can learn. I teach in my 60-day boot camp. But let's talk about this trading slump. So you're in a trading slump. How do you actually backtrack from that, right? Because the whole nature of slumps and why they get deadly is that you could have some small losing days, get really frustrated, and then next thing you know, you're making bad decisions, and then the small losing days start to tack on, and they equal up to a big loss. But then as you see and notice that you have a big loss in your portfolio, right, you end up stepping up the risk, stepping up the aggression, and a whole host of bad behaviors come out of that, right? You start chasing, you get FOMO, you end up long, short the same stock, or you keep buying it and selling on support, buying it, selling on support. We call that the spin cycle of despair, right? Where it's like every time you buy something, it goes down. And every time you sell something, it goes back up. And that's natural. It's really infuriating, right? It's almost depressing in so many manners. And sometimes you just don't even know what to do because you stop trading stocks and you start trading your P&L. You start trading your emotions. You start trading your hopes and dreams. And then everything can get out of control. And guys, I have seen people blow up six-figure accounts in a matter of days when they get into this. And so it's important to bust a trading slump very, very quickly. So how do I first define a trading slump? Because that's important because you have to define it to know it. So for me, I'm on slump watch if I have back-to-back losing days. All right? As a day trader, you're going to have days you lose. When I lose back-to-back days, it means that I'm doing something usually psychologically wrong. I'm over trading, I'm chasing, I'm giving back profits, or I'm oversizing, right? There's a handful of things, at least for me personally, that I do. And for you guys, you'll have your own things that you kind of do, these bad habits that creep up. So for me, those are it. So I define a slump watch, meaning it's a warning on back-to-back losing days. So if I lose back-to-back losing days, then I'm on hardcore watch, meaning on that third day, I'm usually waiting out the open because the open is really where it gets tricky sometimes and you don't let trends set up and there's a little bit more guesswork and intuition. But most importantly, there's just a lot more speed. And when you're not trading well, it's hard to handle that speed. So on day 3, I usually wait out the first 15 minutes. Then what I usually do is I will only take a stock that I have history of making good trades on. So it could be something like an AMD or NVIDIA. We all have kind of a handful of stocks we trade well. And I'll only take it with an intraday setup that I know I've been winning on recently, right, in the last handful of weeks. That way I have some recent success with it. I'm obviously trading it well. And so I have that comfort level of knowing I get really good entries with that specific setup. If that does not work on day 3, I consider myself in a slump. Day 4, I'm cutting back my size significantly. What often new traders and experienced traders will do when they lose is they will make an attempt to make their money back very, very quickly, often in one go, right? One day. We call that the YOLO trade or the Hail Mary. That's usually the wrong way to do it, and it's not usually, it's always. Once you're already trading bad, you have to recognize that and cut your risks. So on that fourth day, I'm cutting my risk in half, meaning if I'm risking $500 per trade, I'm going to go to 200 or 250, right? I usually do even numbers because it's just easier. I cut my risk down. So that means inevitably you're cutting your size down also, right, in half. And so now you can trade a little bit more stress-free because you're not worried about your P&L as much. And then the whole point on that day is to get on the board with some kind of gain, some kind of good trade where your process was done properly and you actually followed it through your trade plan, all right? And what I want to be doing on that fourth day is trading stocks that I know and I have a history of success with, trading setups that I am winning on recently, and I want to cut my size down very, very aggressively. If I don't win in the morning on that fourth day, I keep cutting down my size on every single losing trade till I start hitting some winners, right? And once I start hitting the winners, then I can slowly increase my size. But every single day I lose, I will keep cutting my size in half. Where if I'm now on day 6 or 7 of my slump, I might be just risking like $50 per trade, something just so small, just so I can get focused on not making money, but making good trades, following my process, following my trade plan. And then as that starts to work, and I'm trading a little bit more stress-free, every day that I win, I'll increase my size again. I won't go back to my original risk of $500 per trade, but I will take it from $50 to $100. And if I win that day, I will take it from $100 to $200. If I win that day, I'll take it from $200 to $300. So it may take me 5 days to get back to where I was in terms of risk. So it ends up being really a 10-day process, but that's the way to stay in the game. There are no traders that have survived, especially these type of markets, when they just keep increasing their risk, especially when there's so much volatility and so much unknown, but also you're just trading like crap anyway. So you want to keep cutting it till you start winning and then start to raise it. Guys, this has worked for me for 15 years. When I usually go off the rails, this is the exact system that I use, and it'll work for you guys too. The big thing is just to recognize you're not going to make your money back in a day. You're not even going to make it back in 2 or 3 days. But what will happen is as you start trading better, you can start increasing your risk. And guess what? You know how it is. When you're on a roll in trading, it's like you see all the angles. You're playing 4D chess. You don't even need to look at charts sometimes. Like you just feel the action and everything works. And the opposite is true when you're trading bad. So what we want to do is get ourselves back into that kind of positive flow where we're really feeling the market and our intuition is firing and our synapses are firing and our fingers are moving fast and everything just clicks. And so think of it as a 10-day process to get out of your trading slump, but this will work. Guys, smash that like button. Let me know if you have any questions. I look forward to hearing from you guys.